Hi, I'm Jessica Chariton. I'm here with my co-host, Ashley Kappel. We're the Real Estate in the Rockies podcast. And today we interviewed Brian Tanner, who is the Vice President of Public Policy at our Colorado Association of Realtors, of which I'm a member. He has been really influential in helping our Realtor Association interact with legislators at the Capitol and really shaping what we accomplish as a lobbyist group in the state. And so thought it would be interesting, since the legislative session for 2026 just concluded, to have a quick review of some of the bills that passed or didn't pass and how that whole system works. I think we discussed a lot of really interesting things that we hope you learned something from. Today, we are going to interview Brian Tanner. We're really grateful that you're willing to meet with us. You've had a busy morning interviewing candidates for governor with the Colorado Association of Realtors interview panel. So can you give us your title and tell us a little bit about your job?
Yep, happy. And again, thank you for having me. So I'm Brian Tanner. I'm the Vice President of Public Policy for the Colorado Association of Realtors, which essentially says I oversee everything in terms of government affairs. So from a policy standpoint, from under the dome to all of our electoral efforts. So things at the ballot box, things at the local level, the state level, federal. We work with the National Association of Realtors and local associations. Anything that is going to be considered political policy is something that's going to be within my realm in terms of the work that I do. I am one of probably the few folks out there that is putting my political science degree to use.
Yeah.
There's a lot of varied backgrounds in terms of politics out there. And I actually did get a degree in Bachelor of Science in Political Science from the University of Oregon. So it's been a quarter of a century, which sounds like a really long time, working in the field in various states in various manners. But I've been with the Colorado Association of Realtors since 2023. So great experience. Again, a lot of work in terms of translating policy to actually impact in terms of the work that it affects our members and licensees.
A lot of political science degrees go on to become attorneys.
That's true. I was not a political science major, but yes, that's true.
We at Colorado Association of Realtors are always really grateful for the role you play. I'm a member of Colorado Association of Realtors, so
thank you.
Say that.
And look, I think it's important to, again, I have to highlight, I am not a realtor. I'm not a licensee. And so sometimes people think, oh, you've been in the field. I'm like, my expertise is in terms of the political system. And really my role, like, again, is talking with you, Jessica, our legislative policy committee, about taking your experience and in terms of the practical applications of these policies and regulations, and then tailoring it to an audience who, again, as you know, our elected officials actually have very little practical experience. So how do I translate real world experience to the policy standpoint is a lot of the work I do, but I don't have that licensee background.
Yeah. And I think one thing I didn't realize until I worked with the Colorado Association of Realtors on these political, impactful things was how the people who are elected, they do have a very narrow experience. So it is important to have lobbyists and different sectors giving input and sharing wisdom and advice and helping us make good decisions. And I'm not saying that in a critical way. It's just one person can only have so much real world experience and only one career and all of those sorts of things. And so they need some input. I used to think lobbyists were like bad. When like the lobbyists, it's like a dirty word. They spend a lot of money and then get their way with people that are in positions of power. But in reality, it's a necessary part of our political system. So, yeah.
It is. If you don't mind, I just will piggyback. in many ways, lobbyists are institutional memory. Again, we have term limits in our state, which again, I think is a good thing in terms of getting fresh perspectives and new voices. But you have folks being like, hey, look, we tried this 10 years ago, and this is why it wasn't successful then. You should at least know that. So we're a lot of sort of the memory bank of past policies, or why did we do that? Why is this on the books now from 10 or 15 years ago? So I think the lobbyists, we do a lot of education. The phrase is this, is legislators and elected officials, their knowledge runs an inch deep and a mile wide. And that's so true. So if you want to get below the surface in terms of the actual impact, it takes a little more time and sort of giving them real world examples as to like how this policy could harm or help in a certain field.
That's a great explanation.
Yeah. So let's jump into our questions. So Colorado lawmakers introduced more than 400 bills this session. And the Colorado Association of Realtors, or CAR, which we'll refer to that in this session, tracked over 40 with direct implications on housing, property rights, development insurance, and real estate transactions. So from your perspective, what's the single biggest theme of this session for Colorado property owners and the real estate industry this year?
I'm happy to report. And again, I actually think the number might be even a little bit higher. I think you were closer to more than 600 out there.
Thank you. Maybe our numbers are outdated.
Yeah. No,
what's to say? It is like a lot of bills. So each lawmaker essentially gets 5, right? They get 5 bills. You got 100 lawmakers. And then there's all these committee bills and late bills and stuff like that. From both real estate in terms of realtors and in terms of the impact on consumers and I think it was a very successful year in terms of protecting property rights. We were able to defeat some bad bills that would have been harmful to housing providers or landlords. And we got some, I think, really like good improvements. Like we helped pass some bills that I think are going to make an impact and be beneficial out there. So the takeaway and what we're trying to communicate out is that it was actually a good 2026 session for both folks that work in the real estate profession in the field and for consumers who are looking to buy and sell in property transactions in Colorado.
Yeah.
That would be the very short, concise answer. It was good.
We'll dig deeper.
Yeah. Do you have like something you noticed that was a recurring issue over and over? Like, I know what I think of working on the Legislative Policy Committee, but I'm curious to hear what you would say.
Again, we try to almost do buckets of bills. So Jessica, as you know this, we group bills by our subcommittees out there. And for folks who don't know, how we group ours just internally of all the bills, we've got a housing subcommittee, we've got a land use subcommittee, we've got a regulatory, we've got a water subcommittee, and then we've got a business and taxation. Those are the 5 buckets that we group bills in. With every year, I'll just start with the one that tends to be the most challenging, is around the sort of what we call landlord or tenant bills. We always see a handful, if not more, bills in that space. In part, part of it's our political composition. Our state overwhelmingly has Democratic majorities in both the House and the Senate. There's a lot of calls for action from various interest groups to protect tenants. So there's a lot of bills that are looking to expand protections for tenants out there, which again, we are not opposed to that, but it's in terms it sometimes comes at the expense of the actual housing provider and actually definitely impedes and erodes rights in terms of property rights. And so we try to bring that perspective of, we understand your intent here is to help tenants in terms of housing protections, but you actually might be causing rent to increase, and you might actually be reducing the available rental stock if people are selling those rental properties because they're just done with all the regulations. And now you've got an owner-occupied property that's one fewer residents that could be a rental property. So we talk a lot about unintended consequences and be like, we understand your intent, but the actual application in the real world is going to go against what you're looking for in this bill. So that's always been a big bucket. We've talked a lot about taxes this year. Taxes has been one of the main frames, sort of big pieces. Just in that piece, again, the state budget is again not as well off as it was. There's other issues that are outside of our sort of outside of our lane that are driving cost up in terms of state government stuff out there, but that trickles down to local governments as well. And so we saw a kind of a flurry of bills in the local government revenue space. Vacancy tax was one of the ones out there where local governments wanted to add this tool or go to voters and ask them to enact a vacancy tax on properties and really give them carte blanche in terms of what, because the question that everyone always asks, and it's a fair question, how are you defining vacant? Like, what does that mean? And this would be up to every local community. So it could be a certain number of days. It could be certain rooms. There's no clear in terms of like, how are you tracking if a property is vacant, which people get, and rightly so, very weirded out. It's very big brother acid. Like, how's the government knowing my property is vacant or not? And there's some affidavits and things out there, but that is something that we find is going to be harmful. And we actually flagged, I mean, like, we understand your intent is to go after like second homeowners. But again, these are people who are paying property taxes. And if they're not using our schools and if they're not using our roads, but they're still paying property taxes, that does help that local community in providing services. And again, part of it's like the intent and the impact is very limited. So that's one. We talked about a land use tax, which was a simplification about different mill levy rates depending upon, kind of different mill levy rates for property tax calculations. That's what's going to be like a highest and best use of your property, which is, I will just say this, it's very, I-25 front range centric. But if you're an older property owner who's got a larger lot, but you might have a 1950s home on a larger lot, you essentially could be penalized because you haven't scraped your property down and put up a 6,000 square foot property on a tighter property line. And so this is where we were flagging, like, people on fixed incomes could be harmed by this new taxation of like, how much land are you using, and are you not using enough of it in terms of your current sort of property structure? Yeah. So a lot of education, and we were to defeat these bills. So I just want to flag, without giving bill numbers, which is a really bad habit in our space, as Jessica knows, this bill around vacancy tax, a bill around land tax, we were able to defeat. And I think those are some things that helped consumers, helped property owners across the state that we want to flag.
Yeah, I would agree. The theme to me during legislative session was trying to protect property owner rights and therefore protect the person that can't afford to live in Colorado. Because as soon as we're nickel and diming and more like $1 million and $1,000-ing property owners, it makes it really difficult to keep rent rates at a normal level. And it also drives landlords out of our state. And then they go invest somewhere else, and we don't have those rental properties that we need for the people that aren't going to buy. So it's very interesting to watch the intent be so far off from the actual implication of the bill. But there's lots of good things to learn in all of the bills that are presented, in my opinion. So early in the session, Colorado Association of Realtors backed some big housing measures, and I won't say the bill names, she said, but expanding workforce housing tax credits. Mm-hmm. Is it helpful to you if I say the bill names, Brian?
Sure. Like I've got the bill sheet here.
Yeah. So SB 001 and HB 1001, which aim to streamline residential development approvals and reduce barriers to building housing. And at the same time, CAR opposed measures like the vacancy tax that you just mentioned on underutilized homes and the land-based mill levy tax that you also just mentioned. So how do we draw that line between government policies that genuinely help and ones that are going to create unintended harm to our economy, to our tourist base, because that's a big part of Colorado's economy, to our landlords, property owners? Like, where's that line and how do we figure that out? I like what you said earlier. I guess maybe bring that back into it, is the long-term memory of our group. So
Can I just add a follow-up to that, just especially in mountain towns, which our focus is focused around, where housing supply is constrained and construction costs are high. Just thinking about that too.
Well, it's again, this is where we talk about the cost of housing overall in Colorado. Again, I think the figures I've seen were like for 48th in terms of housing affordability, and it's not rocket science. And the thing that we have been working as an association on is in terms of how do we help improve inventory? Again, as we've got constrained, and again, especially in mountain communities, like how do we help in terms of workforce housing, which is some of the tax credits of like how do we use the sort of revenue tools that we currently have in our system with tax credits or rebates or discounts in terms of spurring development and like encouraging development to get more units online at all price points. So we need a wide spectrum of housing things out there. The state demographer says we've got a shortage of about 106,000 units. And that's across the state. It's not just the Denver metro area. It is across the state in terms of the need out there.
I would say it's especially in our mountain towns.
Yes.
So you said 106,000 units?
106,000 units. And that's probably the state demographer being conservative. We have seen figures that are well into the 125, 150, but 106 is what the official nonpartisan state demographer has tagged as our current housing unit shortage.
Wow, that's really interesting. So the line, then I'm going to summarize a little bit of what you said and correct me if I'm wrong. Anything that spurs that growth and development, which some people in Colorado are against, but creates all different price points of housing, while anything that's harming that housing base, and we know that from our long-term memory, is where we are trying to draw the line. That's complicated.
Yep. I think you captured the sort of complicated mess that we operate year in and year out with a whole different batch of legislators next year. We've got elections going on. We will have a brand new batch of
baby
legislators.
lawmakers.
Yes, and who will have wonderful ideas and concepts. But again, this is where the practical applications of some of these wonderful ideas, we may have to do some education again, in informing about the damages or the unintended consequences that could happen with certain policies.
Very interesting. Yeah. So shifting to another topic, one bill that flew under the radar but affects real people every day was Senate Bill 54, and that passed unanimously and addressed post-closing occupancy agreements where a seller remains in the home temporarily after closing. That's incredibly common in Colorado mountain communities like Salida and Beebe and Steamboat and Summit County, where moving logistics, construction delays, weather, timing gaps can complicate the transaction. Can you explain what was actually broken under the existing law, what risks buyers and sellers were facing, and how the legislative fix changes real estate transactions going forward?
Yeah, I'm happy to. This is a bill that we helped lead just because, and again, it goes back to, I mentioned the flurry of bills that we see in that sort of tenant landlord sort of space out there.
Sure.
There's a law, like, again, there's been a number of laws passed in recent years around security deposits, whether to either cap the amount at a certain dollar amount, a certain period of time. Like, again, you spread the security deposit out over 12 months. We've seen bills around that. But essentially what happened was that security deposits were tied to rent, like as a percentage of, I think, 1 month of rent. But problem is what happened is in terms of post-closing occupancy agreements, you have a security deposit within that, right? Hey, I'm going to let you stay in my property, my property when I take ownership of it for a certain period of time. But at the same time, if there are damages that are incurred, there should be a deposit to offset any damages that may or may not happen. Problem is if you're not charging rent, your rent is zero, which is, again, from a PCOA standpoint, that is always the case.
And what's PCOA?
Post-closing occupancy.
Okay,
Post-closing occupancy agreement.
Sorry, I'm asking the question.
We like our acronyms in real estate.
Sorry, the alphabet soup.
Just for the benefit of listeners and me too.
Yeah.
The post-closing occupancy agreement, if the rent is zero, by law, the security deposit should be zero.
Right.
Because it is a based upon that figure.
Sure.
So we in Senate Bill 54, we removed security deposits from all of the other sort of tenant landlord space out there. If it's part of a transaction, If it's part of a post-closing occupancy agreement, you can have a security deposit that is not tied to rent. It can be that figure that's agreed upon between a buyer and a seller. So from a transaction standpoint, you no longer have where, again, there are workarounds. I think the whole thing is there's workarounds for practically everything, but we were seeing this, I think, in closing cost and some of the additional things like, well, we'll have some money set aside for this, but it will not be an actual security deposit. This provides a cleaner sort of, from a legal standpoint, a cleaner sort of line to where you're not doing workarounds and which could expose a buyer or seller to unnecessary legal action. So we're happy. We're very happy about that piece. It just because you shared, it's not super exciting to the outside world, to the public. It's not making the front page of the newspaper, but from a transaction standpoint, it just makes things cleaner. And it makes, again, transactions are already complicated enough.
Yeah.
Let's at least take one complication out of the formula and make it easier for both buyers and sellers.
Some of the risk. Yeah, totally.
Yeah, I even had that happen to me where I did the same thing and the washer broke after they had stayed there and we were kind of out of luck. So,
Was that when you bought
we
or sold?
sold
Yeah.
and we we bought and we let the seller stay in the house for a couple months while they were trying to get their ducks in a row. And then when we moved in, the washer didn't break. The washer was broken. So we had to pay for that because we didn't have any. This was a few years ago before this was in play.
Mm-hmm.
So issue that does affect people.
Yeah.
And I think it's surprising, like it is a common tool. And Jessica, the post-closing occupancy agreement for many people is a powerful thing to help a transaction move forward. If not, if you're literally waiting, if you've got, again, pieces that have to kind of flow in the chart in terms of like, I really need to sell my place, then like,
I would say it's become even more important in the last 2 to 3 years because people have to use the equity in their property to buy with the interest rate being so high. So I've executed more post-closing occupancy agreements than ever before. People literally are, going from one property to the next, and you just can't do that in one day most of the time. So
Sure.
it's become a really important piece of the transaction. Yeah. So there's a few fun hot topics I'm going to throw at you.
I'm ready.
I'm curious to hear your opinion. We have AI. Colorado's new AI consumer protection law takes effect June 30th. We have wildfire risk and defensible space code requirements that are, locally regulated, I guess, but it's really affecting the entire state. And especially with the last few, 5 to 10 years of some really bad fires that have damaged property and made people entirely vacate whole towns. And then we have, with that wildfire risk, we also have insurance in general. Situations in other states, I think, have not just the wildfire risk, but like the California fires have even caused, it seems, insurance rates to go up in our area because insurance companies are trying to cover their costs. And, I've had deals that have almost fallen through because people can't find insurance that they can actually afford and still make the payments. So of these 3 issues, the AI regulatory things, the wildfire policies, and insurance availability and insurance costs, what is concerning you the most long-term? What should we be keeping eyes on, especially as we go into next year and the next legislative session? What do you think?
Not to diminish any of the issues, but front of mind, the most concerning, hands down for me, is insurance. Again, insurance, and I think it's so important. We talk about this wild urban interface, the WUI of the stuff. We've got about, I think it's either 3 or 4 million people who live considered within a WUI. And again, a lot of the I-25 corridor is technically in a wildland urban interface.
Yeah.
The thing that I talk about is when again, as you're looking at properties and a property becomes uninsurable, you can't secure insurance. It doesn't affect just that property. Like, again, you've got now like that neighborhood. You've now got that community. You've got that zip code that has now been tagged as like uninsurable.
Yeah.
That is dangerous. It is a dangerous precedent that, again, transcends a single property transaction to now an entire zip code or a whole region of the state. Look, we have a love-hate relationship with insurers. I think most people out there for various fields and reasons but we need private insurers in Colorado. So this is where we do a delicate dance where like we need not just a few, we need a whole competitive balance of private insurers. In part because some of they pay a percentage. The admitted insurers in Colorado pay towards our insurer of last resort, which is called the FAIR Plan. The FAIR Plan is a public option if you can't get insurance, that you provide documentation that you've been denied 3 times. This is where you can go to the FAIR Plan and get coverage up to $750,000 for a residential property. That figure, it grows up to the millions in terms of commercial property. I don't have that exact figure, but it's significantly more. But you can't even qualify for it until you provide proof that 3, again, admitted insurers have denied you coverage on your property, which is not a good thing, but at least it's not completely throwing off the entire market.
And how did you say that's funded?
It's funded through a fee. So admitted insurers pay again, we'll need to double check this, but it's a percentage. It's either 2 or 3% a fee that goes into this fund, this pool of funds for the FAIR Plan.
Okay.
This is where there's a whole website. I don't have the website front and center, sorry.
That's okay. We can put it in the show notes later.
Yeah. If you just Google FAIR Plan Colorado, there's actually a really great site that says like what it does and doesn't do and how you can apply if you can't get insurance out there. But
you said it was 750,000 is the max?
Yep.
So if you have a home that's worth more than 750,000, you're sort of out of luck.
You are on your own in terms of that piece. So now that said, we just found out, again, we had our Regional 11 conference. I found out that one of our neighboring states, the cap for their sort of FAIR Plan, I think it was New Mexico, was 250,000 until just this year. Wow. So
that's stuck in the 1990s.
That is practically nothing in our market across our state. So
that might cover 2 of your cars.
I mean, I think 750, correct me if I'm wrong, is around the average of
the median price point
in
for our
county.
Yeah, that's accurate.
I mean, this thing, I think even the director, like the people with FAIR Plan would have been like, this is not good coverage.
No.
Like this is an emergency stopgap to get something back on an investment, but it is not meant to make you whole. It is not something, and again, the premiums from what I've heard, the premiums are not shared, but from what we've heard and gathered, it's pretty high. Like it's significantly more. And again, you're capped at $750,000. So it is an insurer of last resort, and that's purely where it's at. Again, from the insurance piece of the thing, and again, from our mountain communities out there, it's just so critical. A lot of our condos and our HOAs in our mountain resort communities, like again, if they go from a policy and then all of a sudden that policy increases by 3 times, which is not unheard of, now you're talking about a special assessment on condo owners in that HOA complex out there, in which could be a lot of people who are on fixed incomes or retirees.
Oh, sure.
And you're talking thousands of dollars as a special assessment. Now you've got a run on short sales and people looking to get out because they can't afford the insurance increase because they're on a fixed income. And we've got an aging population across our state. So when people are being hit with 2-3 times what they were expecting from a homeowner's insurance or property and casualty, that is punishing and punitive. And it is something that is concerning to me because we haven't found, I think, the right solution as to what we need to do. There's a bill that we sort of supported and amended around creating a grant program to replace roofs. Hail damage is the number 1 driver of insurance loss. Again, hailstorm on the I-25 or I-70 corridor, it's $1 billion every time there's a major hailstorm. Yeah. That is actually what's driving loss for insurers. Wildfire is a small component of that.
Okay, that's
interesting.
Yeah.
Jessica, that's the other thing too. You asked, the first question was around some of the codes, wildfire resiliency code boards, the local level. This is where I think as an association, we are going to have to do some more education about ripping off the Band-Aid about home and property and casualty insurance rates have been sort of arbitrarily low. And again, as building codes are becoming more stringent in terms of what you need to do for defensible space or home hardening, this is where we're ripping off the Band-Aid, being like, these are mitigation efforts that are required to like keep insurance in the state so that you have insurance on your number one investment, but the costs are going to be significant. Any argument
The
is said it was
cost to
actually
the
great.
builder, developers, that
Yeah.
homeowners too. Yeah. Or people
It is.
buying the homes or building the homes, right?
Well, and this is really important to note. If you are retrofitting or renovating your house above a certain percentage and it's an existing property,
Yeah.
these new codes that are coming from this wildfire resilience code board are going to impact you.
Yeah.
And this is something that supersedes local sort of codes out there. It is a requirement to meet that. And again, the piece behind it that's driving it is like, we need better home hardening, defensible space, so that if there is a wildfire, that it's not taking out thousands of properties and causing billions in terms of insurance losses.
Wow. That's just to figure out.
There's a lot going on.
So yeah, insurance keeps me up at night, in part because if we don't have admitted insurers, again, use Allstate, State Farm, Progressive, like the nationally known, you then get non-admitted insurers, and these are ones that are going to provide you some coverage, but and again, higher premiums, but it's not guaranteed coverage. Like, it's not like you've got a federal sort of banking to back up the losses. But if there's a major catastrophic event, these are insurers that will go under, and you're just at a loss. All those premiums you paid year after year after year, maybe in the 10 to 15,000 range, you no longer have coverage. Like, and your home or property is not going to be replaced. So that's my concern, is we're going to see an influx of non-admitted insurers offering people these packages that are not guaranteed, just so that they can go to their lender and be like, I've got insurance. But when push comes to shove, it's really concerning that these properties will not be replaced. And we're seeing that in a lot of, I think, southeastern states, where you see this influx of non-admitted insurers.
Hmm.
Wow. Yeah, that makes me a little worried.
Sorry, I wish I had some good news. Like, I don't.
No, I mean, it's important to know. It's something I've been worrying about too, on a one-on-one basis with each client. It's like vetting that piece, that deadline in the contract has become ever important, because it used to be a deadline in the contract you could just kind of gloss over almost. Like, they found their insurance. It was the same guy that they've used for 20 years, and that works with the payment they need, and there we move on. But the insurance termination or insurance availability deadline in the contract is really key, and you can't miss it, because it could affect whether or not they can afford the property, because it's become so expensive. So
Yeah,
got to pay attention to that. But
for
yeah.
sure. So we're going to wrap up with a question about kind of what comes next. Governor Jared Polis is entering his final year in office, and dozens of legislative seats, as you mentioned, were filled by vacancy committee appointments. Or, well, you didn't mention this. You just mentioned that there might be some new lawmakers rather than general elections. And the 2026 cycle could reshape more than 80 seats at the Capitol, as we understand it. You've worked on campaigns ranging from school board races to presidential politics, so you probably understand both policy and electoral strategy. How does this post-session political environment shape what CAR prioritizes in terms of candidate support and advocacy? And for realtors, homeowners, and rural and mountain residents who care about property rights and housing affordability, insurance access, what should we be paying attention to as we evaluate who's going to be going to the electorate?
Great question. Because again, we're in that transition point. We just finished the 2026 session, and now it is election season. Every candidate, for every state House seat is up. So you got 65 state reps that are running for re-election or for just election. You've got, I think, 20 state Senate seats. You've got, and this is the big one, all 4 constitutional offices. We will have a new governor, attorney general, secretary of state, and treasurer for the first time in 8 years. So you're going back to 2018. You're going back to pre-census redistricting in terms of the top 4 offices in the state, which is going to be incredibly impactful for both people that are in the real estate profession and licensees, and for consumers and clients, as to like, what does the market look like in Colorado for starting in 2027 up until really 2030, which is a little mind-boggling to say 2030, but we're right there.
Close enough. Yeah.
The piece I think the takeaway that I would share with anybody on the planet is get to know all of these candidates, get to know like who may very well be representing you under the dome in 2027. And I will say this as well. You may not like that person. You may not agree with their leanings out there, but I cannot stress enough like how important it is to get to know them. And like again, we talked about that fractional knowledge around real estate, housing, and property rights. Even if you don't agree with them, it's important that they at least kind of know and hear what your experience in the profession is and what your experience with consumers has been, because it's doubtful that they have that same experience. And now is the time. The best time to make friends is before you need them.
Yeah.
So June through December is the best time to meet these folks in your neighborhoods, in your communities, before they get to Denver, where there's a bubble. There's unequivocally you get in a bubble because you're in that building a lot of hours each day for 120 days. Again, people rent apartments so that they can work there Monday through Friday. So it helps to sort of break down that bubble when people get to know the candidates now.
Yeah.
Again, I just mentioned about the institutional memory that lobbyists bring with the turnover there. We'll see that again in 2027. We'll have a lot of people with new ideas and concepts that maybe not so new or so wise in terms of the unintended consequences out there. But I think that's the piece. And the thing that I want to stress with everyone, because people get frustrated with us, Jessica, you know this, we've preached this before. Politics trumps policy every single time. You can have the perfect policy on paper that will make a world of difference. But if you don't have the right politics lining up with that policy, it will
Not
get
going to
crushed.
go anywhere. Yeah.
And people were just surprised about how math drives a lot of our political decision making, is because you've got to count to certain numbers. You got to count to 33, 18, and 1 for a bill to pass. 33 is half the number in the House, 18 is half the number in the Senate of 35, and then the governor's office, which will have a new governor. But if you can't count to those numbers and you have a really horrible, no good, very bad bill that is going to pass, this is where we get into what we call like amend positions. Like, well, all right, this is a horrible bill, but we cannot allow it to pass in its current form. So how do we do damage control? How do we get amendments to make this bad bill better? Which is tough. It's tough for people that are like, why don't you just fight to kill it? I'm like, well, the math isn't there. We can't count to those numbers to like defeat that. So who's in office in January of 2027, who gets elected this November, is going to affect the math. It's going to affect the 33, 18, and 1. And right now, Democrats are one seat short of a supermajority in both chambers. That is the political reality of our state. That is our political composition. So that's, I think, the key takeaway is math drives a lot of our decisions, because best policy, worst policy, the math lines up or doesn't line up. That's going to drive decision-making for our association.
I think something you touched on there that I have noticed being at the Capitol and working with legislators this session is that housing, for the some part, I'm not going to say for the most part, remains a somewhat nonpartisan issue where we can talk sense and say, okay, here's what's happened in the past. We have the data to prove it. And here's what needs to happen to create more housing, for example, like the workforce tax credits. So hopefully, or I feel hopeful, that even if we have one party or the other in control, there's a lot of good that can be done and a lot of work that can be done at this level to create a state that does well with housing issues. So that's my goal. But yeah.
And thank you, Jessica, for flagging. Again, for folks who don't know, like, we pride ourselves in what we call Realtor Purple. Like, we work in the middle between blue Democrats and red Republicans. And like, we look at that moderate sort of piece out there.
Yep.
And in fact, in terms of our questions that we ask candidates right now, again, we ask Republicans and Democrats, how are you going to work across the aisle? Democrats are like, you're in power, you're in the majority, but how are you going to reach across to engage people from, again, your colleagues across the aisle? Republicans, you're in the minority. How are you going to work with Democrats to get policies passed or priorities passed for your caucus? So we are trying to figure out, again, that the space that are protecting sort of the real estate profession, protecting property rights, ensuring that we have a housing inventory that grows and is not stagnant.
Yeah.
Those are all, I think, pieces that we work as an association, which I will just tell you right now, we frustrate leadership in both parties. We must be doing something right because
Proudly.
both leaders from both parties are wanting more for us. And we sometimes have to come and tell them, like, we know this seat in this race is really important to you, but the person that's currently there has been really good for us and has been a good ally and something that we can collaborate on. And therefore, we're going to back them. And that sometimes comes with, but we are always very transparent and like we're very clear about the folks that we work with, which I think pays dividends in the long term for the profession.
Sorry, did you have something else? I feel like have a million thoughts running through my head.
No,
But
go ahead. You go ahead. I was going to transition us to
the closeout. There's one other thing that comes to mind, and that's that a majority of Colorado voters are actually registered independent.
Yep.
And that's not necessarily always reflected in what we have going on in the House and the Senate, but there is a large population out there in our state that cares about these issues in a nonpartisan way. And I feel, and you said something a minute ago that I want to speak to for a second before we close this out too, and that's protecting the realtor profession. Mm-hmm. And not just because I want to have a job for years to come, but also because we as realtors on a local, state, and national level, in my experience, do create some of that long-term memory through our profession. So there's new realtors every year, just like there's new legislators, and having people in positions and associations at the local, state, or national level gives us an opportunity to really help the communities that we're in a meaningful way instead of just reinventing the wheel every couple of years. And so protecting the profession is an important note there, I think, too, and working on a state level with people and figuring out, like, what do we really want to become as a state? And there's a lot of people registered as independent. I think it's like 69% of Colorado voters are registered independent now. That's a lot.
It is definitely getting up there. Like, I actually think it's just right around 50%.
Okay, well, I saw a majority. I should look up that number because I can't even remember where I read it. It was a lot.
Well, again, think about this. For how long? I mean, I have been in the state I've got two natives now. But we used to be known as a third Republican, third Democrat, third unaffiliated.
Those were good days.
Yes, and now again, half are in that, more than half are in that unaffiliated. But then you've got, again, both Democrats and Republicans are both under 25% in terms of registered voters. So Republicans are at 23%, Democrats are at 25%. Both those figures are under 1 million registered voters, where, again, the unaffiliated, you're talking about close to 2 million unaffiliated independent voters out there. So that is the trend. Which I think has led to some frustration with state government, and rightly so. And what we have to work through the process. We got to do the political math and figure out policies, because no matter what, you're going to get 100 legislators that have ideas next January, and we got to make sure those policies match with what Coloradans want.
So make friends now.
Yes.
When they're like excited to make friends, because they're campaigning, so they're out, they're in our communities, they're ready to talk to us right now.
True.
Okay.
So we're just going to wrap up with a couple rapid fire questions that we like to ask our guests. So what was your first job before you became?
First job was at TCBY, slinging yogurt.
TCBY,
super
wow.
easy.
I haven't thought about that.
White chocolate mousse was the favorite sort of yogurt back in the TCBY days.
It sounds good right now.
Yeah, that sounds good. What would you be doing if money were no object professionally?
Oh my God. I would be traveling with my family. Again, if money were no object, I mean, there's so many beautiful parts of the world in the United States. Actually, I'm heading to Alaska here in about, my goodness, like 3 days. It's the last state. I've been to 49 states.
Wow.
Alaska is my very last state to knock off on the list. So traveling, if I could travel and experience more of the world, the United States is fantastic, but if I could travel more internationally and bring my daughters along, that's what I would do if money were no object.
Cool.
And the last one is, what does home mean to you?
Home to me is where, one is where my daughters feel super comfortable, where home is where I can kick off my shoes and just sort of veg out and like not think about politics, not engage with other people. As much as like I work and this is my profession out there, I don't live and breathe politics. Like I wanted to see the Avs win. I love watching sports. Sports is my mindless entertainment. I can just watch various sporting events, and maybe not have basically a horse in the race. But home to me is in terms of like where I'm most relaxed and where I can like let my hair down. Not that I have a lot of hair, but I can basically be relaxed. And my kids are comfortable, and they can also kind of be themselves and like feel safe and secure. So to me, that's home. I'm not sure if I'm getting right at the question there.
That's perfect. There's no right answer to that question, but we get a lot of similar answers, which part of why I think it's a fun question to ask.
Yeah. Thank you so much, Brian, for taking your time.
Yeah, we really appreciate it.
Hey, thank you for having me. And I'm happy to be the first that is not in the room physically with you for this podcast. So thank you. I really appreciate you having and getting some great questions. And I would just say it's always an ongoing dialogue whenever you're talking about politics, which some people hate, but is just a fact of life, especially in terms of housing, real estate, and property rights.
Thanks so much.
Thank you so much.
We'll talk soon.
This episode of Real Estate in the Rockies is brought to you by Collegiate Peak Law and Mediation. Hi, I'm Ashley Kappel. I help people make smart, informed decisions when it comes to real estate, especially when things get complex. From contracts to land issues, I'm here to bring clarity and confidence to the legal side of your transaction. I offer legal services and mediation.